Hello everybody, it's Yashar here, back again with another video after a really long time. And in this video, I'm going to quickly update you on recent changes in my stocks portfolio. The dollar figure of my own portfolio at the moment is close to 137,000, almost 126,000 in WealthSimple and 11,000 in National Bank Direct Brokerage account. And our combined grand portfolio of me and my wife worth a little bit over 168k today. My portfolio is now sitting close to its all-time high. Before going over each position and the new changes to the portfolio, I just want to explain why I didn't post any video in the last couple of months. As you may know, I was dealing with a continuous health issue on top of working a full-time job and also dealing with my family and my side business. I absolutely wanted to work on YouTube videos as I love creating content and discuss stocks with you guys in the comment section. But the health issue was really put a lot of pressure on me, and working 2 more jobs didn't really help either. The health problem is now resolved, but I just want to apologize for lack of content again, and I will try to have a consistent uploading schedule from this point on. Okay, let's talk about stocks. Basically, most of my positions that I hold in my portfolio are in the green. So some of them are significantly in the green, 3 of them are basically flat, and only 1 stock is down 16%, which is Louis Vuitton. It is interesting to see that Aritzia, Brookfield Corporation, and Kilam Apartment REIT are all in the green now. I was down almost 50% on Aritzia at some point, basically last year, and now the stock is back and it is up by more than 25%. I was also down around 20% on Brookfield Corporation, and continue to average down on this stock, and Brookfield is now up around 32% for me, which is great. Same thing happened with Kilam Apartment REIT. When nobody wanted to buy anything related to real estate, I was down almost 30% on Kilam REIT at some point, and now the stock is back. It is in the green by 15% for me. Aritzia, Brookfield, and Kilam REIT's epic rebounds were actually major contributors to the portfolio in the last year that caused this portfolio to hit a new all-time high. I will talk more about each position, but now let's look at the overall portfolio allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio of me and my wife. This is a concentrated portfolio with only 14 different companies. The largest holdings in this portfolio are Meta and EQ Bank at 12% weighting, Brookfield Corporation with 11% weighting. Then we have Google and Aritzia with 10% weighting, TD Bank with 8%, Granite REIT with 7%, MasterCard with 6%, Kilam Apartment REIT with 6%, Amazon with 5%, and finally Louis Vuitton and Allocation with 4% weighting each. These 12 stocks together form almost 95% of the value of our stocks portfolio at the moment, which shows how much we believe in these companies and how much we are concentrated in these positions. After these 12 large positions, we have 2 stocks with total weighting of almost 5%, which are Monster Beverage and Tencent Holdings. If the share price is right, the plan is to build a larger stake in these 2 companies so we can have a much more balanced portfolio at the end. In terms of the sector allocation, tech and financials are still our largest holdings, followed by consumer discretionary stocks and REITs. In terms of the currency allocation, most of our stocks are in Canadian dollar, almost $95,000 in Canadian dollar and $71,000 in US dollar. In terms of the dividend, my portfolio pays me around $2,200 per year, completely tax-free right now, which is really good. I plan to increase my dividend income to something like $2,500 per year by the end of 2024 through buying more shares in my dividend stocks, reinvesting the dividends, and also the potential dividend increases. In terms of the individual account performance, let's look at my personal TFSA account first, which performed really well this year. This portfolio only consists of Canadian stocks. Its value is now close to 91,000 Canadian dollar, and it is up close to 28% overall. Here I pretty much just held my positions and bought more shares with the dividends I received and a little bit of contributions. Let's start with Alimentation Couche-Tard. In the last 6 months, I bought 40 extra shares of Couche-Tard, and now I own 90 shares of this company, which is up almost 6%. The stock had a minor pullback recently due to their plan to buy 7-Eleven Japan in a $38 billion deal. The deal is rejected by 7-Eleven, and their management team basically believes that this takeover offer by Kushtar grossly undervalues this Japanese company. But Kushtar has apparently planned to negotiate the deal further. I think while this acquisition can hurt Kushtar share price in the short term, it can be a nice long-term move by the management team at Kushtar. Kushtar has a successful history and track record of acquisitions, and Japanese 7-Eleven is really different from the American one. It is definitely a valuable asset, as Japanese 7-Eleven, in my opinion, are the best convenient store chain in the world. If you ever visited Japan in the past, you know that 7-Elevens over there are clean and bright, they are always busy, and they are stocked with fresh, tasty, and affordable lunchboxes, steamed buns, and onigiris. In Tokyo, there is almost a 7-Eleven on every single block and smaller stores in subway train stations. With Kushtar track record in successful acquisitions and the valuable assets they choose to buy, I think the deal can be good for the shareholders of Alimentation Kushtar in the long run. If Alimentation Kushtar share price remains the same or it goes lower, I would happily buy more shares here. Next, I have 250 shares of Aritzia, and it is up almost 26% right now. I trimmed my Aritzia position when the stock price was around $50, as the position size was a little bit too large for me at that point, and I reinvested the cash into the REITs, TD, and Kushtar. My plan is to hold the rest of my shares and track the next earnings report of Aritzia to see if the management team at Aritzia continues to solve the margin issues of the business and they can increase the cash flow of the company. I should make a separate video about Aritzia after the next earnings report. Next, I have 285 shares of Brookfield Corporation. I am up 31% in this position so far. They recently had an excellent earnings report, and their business and their cash flow continued to grow fast. It's still an undervalued stock here, and in my opinion, this is still a good place to invest money. For me personally, I have enough Brookfield in my TFSA, and for me, Brookfield is a hold in 2024, unless the stock share price basically goes down something like 20%. I don't have any plan to sell Brookfield Corporation or buy any more shares right now. Next, I have 200 shares of EQ Bank, which is up close to a whopping 70% now. I am totally happy with my weighting and position size in this great company. Despite being close to an all-time high, I believe this company can still grow and outperform major indices in the coming years. My plan with EQ Bank inside my TFSA is to just hold the stock and enjoy the growing dividend of the company. I'm actually thinking about starting a non-registered account in 2025, and if I do so, EQ Bank would be a position that I'm interested in buying more shares of in that portfolio. But for my TFSA, I think I have enough EQ Bank at the moment. Next position is Granite REIT. I bought 25 more shares of this company in the past couple of months, and now I own 150 shares of this REIT inside my TFSA. It is basically flat right now, but I'm not worried. Granite is a real estate company with extremely strong fundamentals, even in a high interest rate environment, which was awful for REITs. Granite was able to still grow its AFFO per share while buying back the cheap shares of the company. And they were able to also pay down their variable rate debt. And they even increased their monthly dividend. So I believe once we see more cuts in interest rates, Granite can rebound to its previously all-time high share price. I'm extremely happy with Granite REIT's management team decisions to deleverage the balance sheet during this time, and I will hold my shares in this company at this point. Next, we have Killam Apartment REIT, another great well-run real estate company in Canada, in which I am up 15% so far. I bought an extra 100 shares of Killam in the last 6 months, and now I own 442 shares of this company. At this time, I would probably hold my shares in Killam, but I may decide to add more shares of Killam in 2024 if the share price dips a little bit more. Finally, I bought 16 extra shares of TD Bank, and now I have 166 shares of TD, which is right now almost flat. TD had a lot of issues recently, which I should make a video about it, but my plan for TD at the moment is to hold and collect the dividends over the time and buy even more shares if the dip in the share price continues in 2024. Okay, next let's look at my personal RRSP account. My WealthSimple RRSP consists of only US stocks, and it is up almost 48%. I had a few buys in this portfolio in the last 6 months, which was all about buying more shares of Monster Beverage. Right now I have 75 shares of Monster and I am down around 5% on the position. It's still a small position, but I will try to consistently buy more shares of Monster in the coming months at this point. My target share count in Monster is 100 shares, so right now I only have 75% of my target position size in the company. Here I also have 26 shares of Amazon, which is up 73% so far. Amazon by far was my best performing stock in this portfolio, and I added the stock in January 2023, which was probably the best time to buy Amazon. I wish I bought more shares during that time, but it is what it is. My plan with Amazon is to just hold the stock at the moment, but if I see a dip in the share price, I would like to buy more shares of Amazon. I also have 72 shares of Google, which is up 45% so far. I really like to buy more shares of Google here, as I believe the company is slightly undervalued here. So I might decide to add to my Google position in the coming weeks. I also have 15 shares of MasterCard, and it is up 28%, which I'm happy with my weighting in this company at the moment. MasterCard is an amazing business, and I think right now it is fairly valued, so I don't have any plan to add to MasterCard here. Outside of WealthSimple, in National Bank Direct Brokerage RRSP, I also bought 5 more shares of Louis Vuitton or LVMH, and now I own 40 shares of this stock here. I'm down almost 17% in this position so far, and I have planned to buy more shares of LVMUY in the coming weeks, as this luxury brand stock is extremely undervalued in my opinion. It is one of the best opportunities for me to increase my number of shares in this company. I also have 60 shares of Tencent Holdings, and it is up 30% so far. I really want to increase my Tencent position, but the stock price basically went up quickly after I initially bought the stock, and I'm still waiting for another dip to buy more shares of Tencent. There you are guys, I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos in the future. I will come back with a few stock analysis videos soon, but until that time, I see you guys in the next video. Farewell.